The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Friday the 13th, fantastic Friday edition of today's opening bell on the Trader's Edge. Thanks so much for joining me, folks. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call a soul without high aim is like a ship without a rudder. You know, a ship with a properly trimmed sail can travel in any direction in relation to the wind except directly into the wind. While the set of the sail determines the most efficient use of the wind, the rudder enables the ship to travel in a specific heading. Without a rudder, the ship can do little more than blow aimlessly downwind. Now, what is true for a sailboat is also true for you and I. And there are many things that can contribute to our success. Maybe in your case, it's your charming personality. Maybe it's your dynamic appearance, or your fantastic education. However, those things are like setting a sail, and without a rudder, our steering device, we may not get to our destination. What we all need is a purpose. We all need a goal. We all need an outcome to steer us in the direction of our choice, the direction of our unlimited potential. Now, it's always good to keep our eyes open for new ideas. New ideas are all around us. They always have been. They always will be. Have you ever heard of the Montgolfier brothers? A couple of brothers from France that invented the hot air balloon. One night, Joseph watched as burnt paper scraps rose from the flames in the fireplace and moved up the chimney. It was right then and there when he realized that hot air could make a balloon rise from the earth. You know, there are a lot of great, interesting, and unique stories associated with the Montgolfier brothers. For example, think about this. Who were the first living beings to fly in that hot air balloon? Well, King Louis XVI of France, he wanted to send up convicts for that first test flight. Instead, it was decided to send up a sheep, a duck, and a rooster. That's right. It was Noah's Ark in the air. A sheep, a duck, and a rooster. Can you imagine, folks, what was the conversation that those three folks had? The duck, the rooster, and the sheep up there. Look, most folks don't realize this, but Samuel Colt, he got his idea for the revolving cylinder for his revolver at age 16. As an old seaman, watching the helmsman turn the ship's wheel, each spoke aligning with a clutch that held it fast. Always, we got to keep our eyes open. Alistair Pilkington, he noticed a film of fat floating in his wife's dishwasher. That idea, that's what inspired him to create the process of taking molten glass and floating on a layer of melted metal to provide an otherwise unachievable smoothness, folks. It pays to be observant while reaching for our visions. Look, this coming Thursday, December 19th, I'll be sharing with my subscribers to my Mastering Probability newsletter service, be holding a workshop. I'll be sharing with them a new indicator system that I've built called the RMI, the Rhodes Momentum Indicator. It's not just an indicator, but more like the rudder of the ship that's going to guide us in our decision-making. Yes, the winds of change, folks, they blow upon us, and at that moment, folks, or how about right now? Let's talk about where the winds are blowing from right now. They're coming out of the north. They're blowing the markets to the south. So the real question is, are these winds going to subside? Are they going to pick up steam, or are they going to simply change direction? Look, I've built the ship with a rudder, and I'd love to be able to have you share that with me at this christening event. It is next Thursday. It's at 6:30 p.m. It's December 19th. Access is easy. Just got to sign up for the newsletter service, which you can now do. No obligation, no deposit, no charge to your credit card. Couldn't be easier to become a subscribers and join us for that christening event. Always remember, folks, a soul without high aim is like a ship without a rudder. Make sure you've got a goal, a purpose, and an outcome. Then set your sails and keep your eyes open along the journey of life. Well, let's go check out the winds of the markets. Let's start with our favorite rudder. And that's the currency pair of the euro, Japanese yen. When we last left you, was able to do Tom's show last night. We talked about this when we left the air. What we could see here was that the ES-Mini is at, what time? Well, between the 4 and 5 o'clock show, what we saw was this .786 Gartley sell pattern was failing. And when a Gartley sell pattern fails, especially not one that just reaches the point of the .786 retracement, but one that actually works. In this case here, this one truly did work. If you want to know what your outcomes are, your ideal, your likely outcomes of any type of Gartley buy or sell pattern, just simply go from your A to your D point where it completes. And really what it's trying to do, number one, you're going to get the .382 retracement. That's pretty much natural when you see the reversal signal. But ideally, it's going to come back and it's going to get to the .618 retracement level. In this case here, 141.29. If you are watching us on TigerTV, thanks so much for doing that. If you're listening on the radio or your mobile device at TFNN.mobi, let me describe a little bit more what we're talking about here for you. Remember, you can get a live stream of the show by going to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 smartphones. Click on that. The show will stream live. The A to the D point, your A point out here, because a Gartley pattern, a buy or sell, has got an A to B equals CD in it. In this case here, your A point coming in at 5:30 in the morning. This is on December the 11th. That's at a price low of 140.92. Your B point on this is the 10 o'clock high. Came in on December the 11th. That was at 141.6. How about that? I haven't seen that. That's at 141.618. You got to love that. Then it makes a .786 retracement, forms our C point. That took place at 1 o'clock in the afternoon, December 11th, out at a price point of 141.149. What does it do? It makes the A to B equals CD. It completes right up here, right around the 141.91-ish area. Gave you a nice little, 2 real bearish engulfing candles there. That started to move back, but it did make the .618 retracement. Couldn't get all the way down there. And then what happened as I was doing Tom's show last night, at 4 o'clock, it was just simply retesting. It was like another test of the .786 Gartley sell, and that was at the 4 o'clock time frame. Then all of a sudden at 4:30, it really started to fail as price started to make a 100% move, getting all the way back to the swing point that took place, our X point. That was at 2 o'clock in the morning. That was on December 10th. And when a failed Gartley, in this case here, Gartley sell pattern fails, it turns into a butterfly. Now, the butterfly is going to be typically between the 1.272 or the 1.618. If we take a look at our expansions of our X point all the way down to the A level, you'll see 142.49 was the 1.272. That actually took place, and that occurred at 7 p.m. last night. Then just a slight pullback, and boom, a wide-ranging bar that took place at 11 o'clock last evening. Of course, at this stage, that is the high that's in. That was also getting into the extreme overbought territory using our 14-period relative strength indicator out there. And now what we have seen is we've seen a retracement. So let's go take from all the way from, and that was one of the reasons. So when you woke up this morning, you saw that futures were up. And if you listened to the show last night, that's really what I said. I said, look, folks, the market is going to likely move up because we saw our rudder, which we're using as the euro, Japanese yen. Our rudder was saying, hey, the market is going to follow along. Now, what I also did point out is when there is divergence, when the euro-yen is moving in one direction, the market is moving in the opposite direction, eventually it's going to be the euro-yen that is going to point the way. So that's why we want to utilize that as our rudder system. Now, price actually went up. It didn't make the 1.618 level. That's at 142.92. Got close, but didn't make it. So now if we take a look at our retracement level, I'll put this wonderful tool on my screen here. We'll take a look at all expansions of swing points. Let me get rid of the one level of Fibonacci numbers that I've got out here. Let's get rid of both of those. And what we can see here is that coming off of a swing point, the swing point right here at about 5:30 in the afternoon, this is on December the 11th, we made a 0.618 retracement. That's what we've done here this morning as we're moving down into the oversold level. It's not totally extreme here just yet, but we are reaching a point here where the euro, Japanese yen should begin to bounce. It doesn't have to be at 917 exactly, but we're reaching that point where it's getting to an oversold status, and that says, something to think about. Are the winds of change, I don't know if I can call them winds of change, why don't we just say, are the winds going to change? Well, we're going to be watching the winds here, and we're going to get our signal from the Euro-Japanese yen. Now, if we go take a look at what's going on inside the futures market out here, let's go switch over to the little bit longer-term time frame. Let's go take a look at what's going on inside of the 120-minute chart. This we were taking a look at yesterday because I think one of the best patterns for us to be paying attention to, because it's such a clear consolidation, is in the ES Mini. So the ES Mini, if you're watching us on Tiger TV, you see my yellow shaded box. Yellow shaded box says that we have been in a consolidation mode since November 13th. Today is Friday the 13th. So for one solid month, we have been in a 33-point consolidation range, traveling from somewhere around the 1777-ish range at the bottom, 1811 at the top. And why is that important? Because when consolidations are broken, the price move, the measured move, is going to be equal to or greater than, and the probability is it's substantial. It's like, I wish I could give you the accurate statistics. I will just tell you from watching them, from trading them, from paying attention to them, it's like the 85, 90% range where it is, and it's a great, and look, the beauty of it, when you enter any trade, when you're putting on any trade, one of the elements that you've got to do is reward to risk. So you have to have some type of systems in order to be able to use reward to risk. That's what the leading indicator patterns, such as the lightning bolt, such as the A to B equals CD, allow us to do. Because the market does 75% of the work for us. It gives us our A, our B, and our C points out there. The expansions and retracements, they allow us to identify logical areas of where a market might expand to or where it might contract into. Well, here we've got a 33-point move. When we come back from break, we'll come back and take a look at the CS Mini. We'll take a look at the 120-minute chart. We'll see the price is still traveling within this consolidation zone. A break says to the downside says 1745. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures up about 14 points right now. S&P is up 3. In the world of the metals, you've got gold is trading up $8. It's trading out at $12.33. Silver's up 12 cents. It's trading at $19.58. Light sweet crude pulled back about 90 cents right now. It's trading out at $96.61. A quick peek around the globe, see what we have going on around the world as long as we're sailing around the world. Over in Germany right now, the DAX is flat. It's trading out at 9,017. The FTSE is up 8 points. Over in Asia last night, you had the Nikkei up 61 points, about 0.4%. Hang Seng relatively flat, up 0.1%, up 27 points, and the Shanghai was off 0.3%, down 7. So before we went to that first break, we were taking a look at the ES Mini. We're looking at the 120-minute chart because it so clearly articulates, identifies for us the trading zone. So for one solid month from November 13th to December 13th. So just to put things in perspective. At this time here, let me see. Well, that was at about 2 o'clock in the afternoon. So at 2 o'clock in the afternoon on December 13th, the ES Mini, the December contract here closed out at 1778.25. And right now we're trading at 1779. So we've moved a whole 3/4 of a point in 1 month's worth of trading. Now, there's been some roller coasters along the way, but you can see kind of a relatively flat market. Now, what's the reason for bringing that to everybody's attention? Because you've got to really take a look at what the markets are doing from a number of different perspectives. Okay, so to have just in order to say that, hey, this is a market to start and go short, that we've just seen the major top. Maybe we have. I don't know if we have or we haven't at this stage. But what I can tell you is in one solid month, all that the ES Mini has done is moved us actually up 0.75. It's basically up a point. So it really hasn't done much in one solid month. Yes, we went ahead and made that high up at 1811. What we do know right now is that we're trading inside about a 33-point consolidation. And if we see any kind of break that holds, either to the upside or to the downside, we should see a measured move equal to 33 points or more. That says to the downside, if in fact you break this 1777 level, and in order for that to occur, we'll have to see the euro Japanese yen continue to move south. It will have had to have put in a significant high out there, which is possible. We'll take a look at the 120-minute chart on the euro Japanese yen as well. But that would say it moved down to about the 1745 level. Likewise, if you can't bust it down, what we should see is the ES Mini move all the way back up to the 1811 area, the top of the consolidation, or at least some retracement of that area. And if we take a look at the retracement, there was a slight break of this consolidation. It took place at 5:15 last evening, And then the euro-yen, came to its rescue. That's where there was some divergence because we saw price breaking down a little bit out of the ES Mini. But quite frankly, as we were looking at in that very first segment, we saw the euro-Japanese yen. It was moving higher during that same period. So who won the battle? Yeah, it was the currency pair. It always does. So it's either going to see if we can't break it to the downside. What we should see here is a retracement of at least the 0.618 level, and that will take us into about the 1797 area. So if the ES Mini can't bust it down, 1797 is next on our course. That's the next land mass that price will move up to. More likely 1802. That's a possibility because that's your 0.786 retracement and or the 1811 area. Now, a breakout above that says that the ES Mini will travel up to about the 1844-ish range out there. So that is on the 120-minute chart. Now, if we switch over to the Rhodes Momentum Indicator and take a look at what's going on inside of the ES Mini, this here happens to be the March contract. So if you see prices a little bit differently here, we're rolling over into the March contract. So that's what will be present on my screen for the most part. And on the this is a 60-minute chart. I didn't want a 60-minute chart. I wanted a 120-minute chart out here. Give me a moment to change my data series out there. My apology for that. It's going to be easier if we actually take a look and manage the same time frames out here. So give me just a moment to switch that up. So this is there we go. And what we can see here right now is we're in the stage. This began right at about the, let me get my crosshair. It makes it easier. I can give you the time frame. Right at about 10 o'clock last night, we had the ES Mini really start to stage its attempt at a comeback. Very close. Right now, we're in the little cautionary zone, so we saw that price got up into a little bit of a bought condition, so it's been working its way off. Of course, it was that euro-Japanese yen pullback as well that was adding to what it is that we're looking at here. But right now, what the ES Mini on the 120-minute chart here is attempting to do is to make a breakout. We'll know probably during the next half hour. Well, we'll have a pretty good indication by 10 o'clock what the winds are doing for the day. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 18 points, trade out at 15,757. S&P's up 4, they're trading at 1779. Composite up 14, trading out at 4,012. Russell 2,000 up 4. Apple's up 91 cents. Google's up $3.56. To the upside, Texas Industries up 11% this morning. TXI is the ticker symbol. They're up $7. You've got Simon Property Group up about $6, up nearly 4%. Adobe Systems up 10% this morning. That's up $5 and change. Amazon is up $5. Athena Health up $3. Tesla's up $2. You've got Visa up $1.86. To the downside, you've got Insys Therapeutics down 24% this morning. It is trading out at $33.90. INSY, they're the leader in the clubhouse to the downside. Anadarko Petroleum off 11%, off $9.50. Restoration Hardware off 7% here this morning. Now, not too bad considering last night. I think last night after the bell, it was really down hard. So not too bad as we speak right now. Not compared to last night. I think it was trading in the 50s. Not that 60.49 isn't far from the 50s, but I think it was in around the 57-ish type mark or something like that. United Technologies, UTX, that's off about 2%. Chevron down about 94 cents. Nothing really large to the downside other than Anadarko, Restoration Hardware, United Technologies, and Insys Therapeutics. Let's go take a look here at the, let's take a tour around the commodity sector. Let's go see what's going on inside of Goldilocks and silver. As I mentioned, gold was up just a tad. Let me see what it's actually trading at here right now. You've got gold trading out at $12.31. So gold is still within inside. Let's blow this up on the screen for you. Gold is on the 120-minute chart is trying to mount a charge, mount a little bit of a comeback. But right now trading inside the swing point from June 28th. It really needs to clear that swing point. But more likely what gold is doing, it's really setting up it's going to complete the A to B equals CD down. And it should do that. It should do that because, we're going to see some strength inside the U.S. dollar index. I'll go show you that. We'll take a look at the euro here momentarily. So gold really still should at least make that run for 1178.90. The black squiggly line going across my screen here, that is the U.S. dollar index. It is inverted. And we're seeing the Texas two-step. I don't know why I would call it Texas two-step. That's because we're not looking at light sweet crude, but it is doing the tango out here. And that just simply means that the correlation is in effect. When you see this black line moving down That's what the U.S. dollar index is getting stronger. And so even though we're seeing a little bit of a bounce here today, the basic general direction is in place with regard to the correlation between the U.S. dollar index and gold. If we go take a look at silver, we'll see that silver is trading out at $19.57. It, too, is within inside the swing point from July 1st, the high of which is $20.07. So as long as it's in that swing point, it, too, can go ahead and complete its A to B equals CD down. That'll take it down towards the lows at about $19.36 out there. You can see I've also got the U.S. dollar index on this screen here, also inverted. If we take a look at light sweet crude, then we'll go over and take a look at, we'll finish this out here. As we take a look at light sweet crude now, on the monthly chart here, that's what I've got up on my screen. Andy Hecht and I were taking a look at a monthly chart for light sweet crude. It has been traveling in a consolidation range from $76. That began back in 2010, so September of 2010. The high of the consolidation is about 112. We made those highs here recently back in August when we got a high up to a high of 112.24. So quite a consolidation range out there. But let's take a look at the daily chart for light sweet crude here. Daily chart for light sweet crude shows that it's pulling back now. What's the retracement? If this is setting up a small A to B equals CD to the upside here, the retracement that we should see in light sweet crude somewhere between either 94.44 or 96.08 to set up an A to B equals CD to the upside. If you take a look at bonds here, bonds right now, just a sideways trading range. Have been trading sideways here for a few days. Not a ton of movement. Maybe we don't get much in the way of movement in bonds until after the FOMC meeting, which would be on Wednesday this coming week out here. Natural gas continuing its move higher. Looks like it's still, even though it's in that extreme overbought condition, it just means tighten your stops if you are in a trade in natural gas. But looks like it still wants to move up to its next level. And levels, again, we utilize these Fibonacci retracement expansion numbers to help guide us as to where projections of price are. And the 0.786 retracement right between floors right now. So the next level is at $4.53. Right now you're traveling out at $4.37. A quick peek in on the currency market, on the euro U.S. dollar index out here. We can see just how strong the euro is, how strong the, we can see how strong the descending price channel, this is the weekly, so we're now into a weekly chart, obviously. We can see how strong this descending price channel is inside the euro, taking us all the way back into that 2008 time frame. We've got a trend line. That's the black descending diagonal line going across my screen, the red being the channel lines out here. And that says that we ought to see the euro now reject these highs and actually pull back. And where it's going to pull back to, it's going to pull back to the bottom of the range out here. The bottom of the range, in essence, has been this rising price channel. And that says that from a retracement standpoint, 0.382, 0.618, the 0.382 retracement on the weekly chart says 136.13. So that is a likely target for the euro, maybe 134.91. Maybe it breaks out below the rising price channel, just punches through there. But we can see we've got two competing channels in place inside of the euro on the longer term on the weekly chart. And that's going to put some strength in the U.S. dollar index, and maybe that puts a little bit of weakness overall into Goldilocks out there. Let's go take a look here at so we covered we didn't cover all the currencies. Let's go take a look at some of the other currencies as well. Let's take a look at the U.S. dollar as well as the Japanese yen. U.S. dollar, Japanese yen here right now. Here is the monthly chart. We can see that this. Let's take a look at the weekly chart. We've been looking at the monthly chart here for a while. Let's see what the weekly chart is showing us. So here on the weekly chart shows us a nice little rising price channel that is in place here. It's dealing with the 100% move of a move. That's the swing point right out here from May 24th. So the week of May 24th is what is under attack. The high out there is 103.73. If, in fact, we see it close above that, then it's clear sailing for the U.S. dollar, Japanese yen to get up into the 107.83 level. That is as we take a look at a weekly chart, this takes us back into the 1993 time frame. As we take a look at this, that 107.82 is the area where we have the largest number of co-located opens and or closes right in that area. So that should be a pretty significant resistance zone. If we take a look at retracements here on the weekly chart, let's take a look at a retracement coming off of the time period in 2007, in June of 2007, down to the lows. You can see the 0.618 retracement there takes us to about the 105-ish level. Right now you're trading out at 103.15, so that sets up pretty well for a move higher. If we come back and we take a look at coming all the way back here to the swing point highs in February of 2002 down to the lows, the 0.618 retracement gets you up into about the 112-ish range. So longer term, again, we're looking at a weekly chart, longer term for the U.S. dollar, Japanese yen, looks like it wants higher price out there. Let's go take a look at the monthly chart also was really showing the same kind of a pattern. Now, the monthly chart here shows us that it is breaking this long-term descending price channel. And we have seen a test of this area out here. So it does not necessarily have to come back and test the bottom of the price channel. And this says it's got free sailing all the way up to it. As soon as it can clear that May swing point, no question about that, needs to do that. But if it does, then the 108.99-ish range inside of the monthly chart is what the U.S. dollar, Japanese yen is pointing towards. Let's go see what the Great British Pound is doing out here. Let's take a look at a couple different time frames. That Great British Pound, U.S. dollar here is a monthly chart. This shows here that it's beginning a rising price channel coming off of the lows that were established all the way back in 2009. Let's take a look at the and all it's really been able to do so far is really, since the lows in 2009, from its highs, I remember these highs back here in 2007, because I used to own retail stores out at Disney, so occasionally I would try to sneak out and play a round of golf. And back in the 2007 time frame, all of the Brits were over here, and they loved coming to the U.S. for a number of different reasons, but mostly because the U.S. was on sale, because everything was half off. Because there, the Great British Pound was at $2 versus our dollar out there. So it was just a free-for-all. They were buying all kinds of property, all kinds of everything out here. Well, since that high in 2007, the lows that were put in 2009, all that it's really made so far is a 0.382 retracement. But the beginning here of a rising price channel on the monthly chart. Let's take a look at the weekly chart. Let's see what we have here in the weekly chart. It's really run into a resistance area. That's this black horizontal line that is going across my screen. Now, the lows are pretty well cemented here on the Great British Pound U.S. dollar, and that's the bottom of the consolidation that we're looking at. And the bottom of the consolidation really being in the price area here, we'll call it about $1.50 out there. And at that 150 level, you've got 0.618 retracement of a major set of swing points, the 0.786. I mean, you've got everything out here to cement a pretty solid bottom. Well, now what it's trying to do, it's really trying to break out across the resistance zone. That resistance zone really established back here in January of 2010, the high is which is $1.64 out there. So it has not been able to break above that level where it has tried this week. It got up to 164.65. So it's a strong area of resistance now. Just like we were taking a look at the 120-minute chart for the ES Mini out here, inside the euro, again, from a longer-term standpoint, from a monthly standpoint, if we take a look at that, give me a second, let me find the tool out here. If there is a break above resistance, if there is a break above it, then we should be able to see a measured move equal to that consolidation zone. So if we take a look at that, we push this all the way up here. It says if there's a break of that level, you can see the Great British Pound on the longer-term chart try to move up to the $1.80. Now, if it can't bust it up, what's it going to try to do? Yep, it'll try to bust it down. And by busting it down, it'll try to come all the way back down to that 148-ish level out there. If it can't bust it up and it starts moving back because of the that will also create a stronger dollar. That'll say the pound will get weaker, the dollar will get stronger. If you take a look at retracement levels out here, the natural retracement level from this current give me a moment here. Come on, there you go. From the low that was put in during the week of July 12th all the way up to this week's high. Well, your dead cat bounce says 158.34. Your 0.618 retracement, 154.4 out there. Let's take a look at the daily chart, see what the Great British Pound is doing on a daily chart. Now, on the daily chart here, this shows us that the Great British Pound has broken above a resistance line. That is now the red line going across my screen. And that had this little short-term consolidation pattern that's in there. So right now, The pullback here that we're seeing inside of the Great British Pound, oh my goodness, I think I've lost the battery. How about that? I have lost the battery power, and I don't have any backups that handy that I can go to. How about that? I have lost the battery of my mouse. That is a bummer. You have no idea how much of a bummer that is. Okay, so luckily what I've got here is I've got the finger pad on my laptop. But for 2 minutes here, this is going to be a little bit cumbersome. My apology for that. Let me try one more thing. Let me try to take this out, put this back in. Okay, there we go. Maybe just a little bit of a connection out here, but I see the red light on my mouse, so something I had just simply overlooked. So right now what we can see here, it's always something, right, folks? Right now what we can see is the pound here is it's testing the area of support. Old resistance becomes new support out here. So this would say if it can break down below, I'd say the level of about 162.2, you're at 162.22, you're 162.20, you're 1.627. So not that much lower. If it can actually break below that, then we'll probably see a pullback into the bottom of the consolidation right around the 158 level. But that is coming into an area of support here right now. If that level holds, we ought to see the Great British Pound try to make its move up to about the $1.66 level, 1.663 out there. So that's what's going on inside of the currency pairs. Let's go see what we've got as far as popping and dropping here in the market. Right now we got a flat market out here. Dow's up 2, S&P is up a buck, composite is up 8 points. Let's go take a look at some of these stocks here that are popping and dropping. Let's take a look at moving to the downside out here. To the downside, we've got, thought I had it on my screen, Restoration Hardware. Yeah, so we got Restoration Hardware. So right now what it did this morning is a gap down with some volume. Volume behind this move. So far today, 2.7 million shares here. So it gaps down with volume, taking on a swing point. It's really close to being a hammer candle out here. So this is important. This is the swing point from October the 9th. Now, it's going to come down there with volume. It already has. That only had 1.1 million shares on that trading session on October the 9th. You're already down there here with the 2.7 million shares. Now, that green squiggly line going across my screen, that is the 200-day exponential moving average. We'll see if that level will hold this thing in place. We've seen a little bit of institutional selling before. We'll come back. We'll take a look at Restoration Hardware. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. A flat market out here right now. Really, the Dow is off 50 cents. The S&P is up 55 cents. Composite, well, the composite is up $8. Russell 2000 is up a couple of points out there. And I have my batteries back, so I'm good to go with the mouse out there. Nothing like things happening at a inopportune time, but that's just simply how things work. So we were taking a look at some of the stocks that were popping and dropping. Let me go back out here. We were looking at Restoration Hardware. So that 200-day exponential moving average seems to be acting as a support line. Last time, Restoration was down at that level at a 200-day exponential moving average would take you all the way back to the April 2013 time frame out here when it really broke out. It began its breakout on April 19th, 2013 out there. So Restoration does not hold this area here, which it is a hammer candle, and so far it's holding in. And really, it's acting pretty well considering last night's move. It was traveling well below this area. I think it was right in about the $57 area, something like that. Anyways, it's at $63 as we speak here right now. Let's take a look here. What else we've got popping and dropping? To the upside, we've got Texas Industries. It's up 12%. So let's go see what that is doing. The ticker symbol there is TXI. Let's go see what Texas Industries is doing. Gapping up. It's got some nice volume behind its move. It's trying to take out a downdraft area here, and looks to be doing that. Now, the volume on that downdraft, so it's traded right back into that downdraft that took place on October the 3rd. It had 1.1 million shares out there. So that was a big volume day, so not a ton of liquidity necessarily inside of this stock. But today so far, gapping up. Let's see if we can find out what's behind the move out here, if there's any earnings or anything. I don't see a darn thing as to why Texas Industries is moving, but has good volume in it so far, 255,000 shares in the first 26 minutes of trading here today. If it can, it's got several areas of resistance out here. Give me a moment to pull this back. Well, that's on the daily chart. Probably on the weekly chart. Doesn't look too shabby. Let's switch this over to a weekly chart. Let's take a look at the retracement. Yeah, not too bad. No real substantial. Let me refresh my screen here now that I've got what did I do there? Refresh. Thank you. Let me see here, volume-wise. The only thing that really sticks out that's kind of nasty when you take a look at the weekly chart for Texas Industries takes you all the way back into the December second 2011 time frame. A real high volume low out there, but that's at a price of $22.50. This thing ever did fall out of bed, $35.84 to $22.50 would be its mark out there. But on a weekly basis, this doesn't look to be too bad. If this can clear, which is trying to do right now, the week of September 27th, that's that downdraft there, and all it has to do is get above 67.65. What it should do is at least go test the highs, and the swing point high out here is $75.30. All it needs to do is close inside 67.43 with more than 1 million shares, and that is likely what Texas Industries will do out there. A quick peek in here. What are we going to be watching today? What should you be watching for? Well, we go take a look at the VIX index here. Let's see if I can pop that up on my screen. Where is it? Here's the VIX index. The VIX right now, we did have that, remember, 2 days ago we had that one-day rate of change that exceeded 10%. And that says that there's a 80% probability, more than 80% probability, that you get a bounce in the day following or the second day after. Again, I looked for that chart. I couldn't locate it. I just need to look. I'll look a little bit further over the weekend, see if I can provide that to you. Right now, the VIX is still, though, above the 50-day exponential moving average, and that is positive for the bears, not positive for the bulls. Stay tuned, folks, for the Nadex Bull Bear Binary Option Hour. Have a great weekend. I look forward to seeing you Monday morning. Take care. I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.